I'm Michael Kaiser with OTC Markets Group. I'm joined today by Daniel Havas of Lynas Rare Earths. Daniel is the Vice President of Strategy and Investor Relations. Lynas trades on OTCQX under the symbol LYSDY and LYSCF. Daniel, thanks for joining me today.
Thanks, Michael. Nice to be here.
How about just a brief introduction of Lynas Rare Earths?
Well, Lynas Australia is the only company outside China today that separates both, importantly, the light rare earth materials and the heavy rare earth materials. So we broke China's monopoly back in 2013 for the lights, which is the NdPr, and we broke their monopoly this year on the heavies, so the Dy and the Tb. It all starts for Lynas with what is recognised as the highest grade hard rock deposit in the world today, which is in Mount Weld in Western Australia. At the mine there, we produce a rare earth concentrate. That concentrate is then shipped to our facility in Malaysia for separation and product finishing. The Lynas facility is by far the largest single rare earth operating facility in the world today. And we have nearly 1,000 staff in that facility. Most of them are chemical engineers. So it is probably the only centre of excellence at scale outside of China today that understands how to do the chemistry related to separation of rare earth materials. Over the past 5 years, we have spent nearly 1.5 billion Australian dollars on expansion to keep up with market demand for our materials. That includes both an expansion, a doubling of capacity at our mine in Mount Weld in Western Australia. It includes the construction of a new cracking and leaching facility, which is also in Western Australia. At that facility, we produce a mixed rare earth carbonate, which then also gets shipped to Malaysia to go through solvent extraction and product finishing. In Malaysia, we also expanded that facility to increase NdPr production up to 10,500 tonnes of finished product. And of course, now this year, we also invested to produce separated heavy rare earth elements as well. So everything over the past 5 years has been about keeping up with market demand for the company, for our products. Most of our customers are situated in East Asia. Traditionally, we sell to magnet makers. And if you think about magnet makers, they are predominantly, obviously, in China, who has the majority today. And of course, Japan is the other country that produces most of the world's high-performance rare earth magnets. We also sell into other markets, including here in the US with some of our products, and of course into the EU, importantly. So we have been all about driving growth for the company and of course for our shareholders as well.
You've talked about the expansion over the last 5 years to serve demand. The company's announced a Towards 2030 strategy. So maybe you could talk about the future and how you continue to meet the demand of magnet makers and the expansion of your business overall.
The previous expansion was all about capacity expansion. And whilst Towards 2030 does have capacity expansion included in it, we're also looking to go further downstream into the supply chain. Now, all of that will make us a far more robust business than we are today. Today, we are an NdPr and DyTb company. Once we have finished the 2030 strategy, we'll be further down into that supply chain, including into the metal and magnet making itself. We went to the market in the end of August and we raised 930 million Australian dollars. It includes investment in upstream resource development, both at Mount Weld and of course into third-party feedstocks, because all of our operations can take third-party feedstock. So we will look to invest further in that part of the supply chain. Of course, we announced in August this year that we had separated the DyTb. And we are now investing 180 million Australian dollars into a larger facility in the Malaysian operations, which will give us a broader suite of the heavy materials, not just the Dy and the Tb. So we will also have samarium out the door by next April. That's included in samarium cobalt magnets. And then once the process is finished, we will have yttrium and gadolinium as well as the additional DyTb. We're also investing further downstream. Our view on the West is that the West is not short resource. The West is short in metal and magnet making. So our view is that by partnering with existing smaller magnet makers, including obviously the large Japanese ones, but the smaller ones both here in the US and in Korea as examples, by participating in that part of the supply chain with those who already understand how to make magnets, we're able to make a much bigger difference far more quickly to build the Western supply chain out. Equally in metal making, and the West forgets that part of the supply chain to some degree, you can't have a magnet without the metallization process, so we will look to invest in that part of the supply chain. It's highly concentrated in China, but of course from our perspective we send product to Vietnamese facilities to then our product be turned into a metal. So we will look at that part of the supply chain. And then importantly, specialty chemicals. We have 70 staff, both internally and externally, involved in research and development of new products, but we need to invest in the scalability of those products to be able to manufacture them at the levels that our customers require. So as I said, all of that investment over the next 5 years will see us grow capacity as well as grow further into the supply chain, and importantly, help the West grow as part of that.
It's really impressive. You touched on a little bit ago the geopolitics of rare earths, and it has been quite the topic, not only this year, but over the past decade or so. I think it's gotten a bright spotlight very recently. Can you talk about the geopolitical landscape and how you operate within it, around it, how it impacts your business overall?
Sure, no problems. Rare earths are not for the faint-hearted, we always say, but it's certainly an interesting sector to be in. Linus was in the middle of geopolitics back in 2011 when China and Japan had their challenge. At that point in time, the Japanese decided to make the strategic investment in Linus. Today, the only country outside China that has a secure supply of separated rare earth materials is Japan, because of that strategic investment, and that came about from the geopolitics of the day. Fast forward to 2025, and of course we're back in the middle of geopolitics, this time more broadly, globally. And part of that has been that the West has finally woken up to the risks associated with the supply chains. You can't have a magnet without the heavy rare earths sitting inside them. You had China put on restrictions of exporting of magnets. And then, of course, you had the very large deal between the Department of War and the MP Materials company here in the US. That fundamentally shifted the market structure today. And we've been able to take advantage of all of that. Of course, the price of rare earths since that time has gone up, and Linus is the only producer at scale today who's been able to take advantage of that, and we are banking every dollar of that upside in price. So geopolitics today is driving the West to finally understand that they need to build their own supply chains. But there is a functioning outside China supply chain today, which of course is Linus with our Vietnamese and Japanese partners. And that needs to be protected today as the West looks to build out their own Western supply chain. That could take a number of years to be able to do that. We've been there, done that. It took us 3 years to get to nameplate capacity on our facility in Malaysia when we first switched it on, because it's incredibly complex chemistry that goes on in the separation of rare earths. So it will take time for the West to diversify their supply chains, and in the meantime, Linus is phenomenally well placed to take advantage of that.
It's a really fascinating story, a really great investment thesis. You're in the OTC's office in New York City today. Tell us a little bit more about your decision to be traded on OTCQX and how it impacts your US-based investor strategy.
We've had a long-standing partnership with OTC. We've traded on the OTC for many years. However, the US is becoming a far more important market in the critical minerals and rare earth space. We are well connected and of course well covered by institutional investors here. However, we felt it was time to do the upgrade to make it simpler for some of the smaller institutional investors and of course importantly retail investors to be able to purchase our stock, not trade it too much, but purchase it and hold it. So we're really thrilled with the upgrade to the OTCQX and we're looking forward to a long partnership with you guys.
Amazing. Thank you for joining us today. To learn more about Lynas Rare Earths, as well as the over 12,000 securities traded on OTC markets, please visit our website at otcmarkets.com. Thank you.
Thanks.